Drawing support resistance, but easier. I'm going to get right into the video. I know there's a million reasons you could click off this video right now, so let me just hold your attention here by just keeping it real simple. So I have traded for 7 years, and I draw support resistance zones where it looks like price is clearly bouncing. Throughout the past 7 years, I've made millions of dollars trading Forex, crypto, and stocks just using support resistance. It's like not that complicated, for me at least. So here's what I do. Anywhere where prices had clear bounces over and over, I draw the zones just like at those locations. So that's the first thing I do is I just make sure that it's a place where prices bounce very clearly over and over. I do not use zones like this where price slashes through it a million times. And some people try to read in between all the lines of it going back and forth and saying, oh, look, it might be a zone. It might be this. It might be that. I just don't do that. I think it's ridiculous. The price hasn't clearly been bouncing there over and over. I don't think it's worth trading, so I don't even bother doing that. So I draw zones only where price has had nice clear reversals at over and over. It's either bounced at resistance or bounced at support. If it breaks past it, it comes to retest, then bounces there. Those are the nice clean zones that are generally pretty easy to trade. Another example would be something like this right here. An area where price is like bounced to support. In fact, it's probably a little bit actually further up here. Broke below, tested as resistance, broke back above, then found support twice. It was support, it was resistance, then it was support again, and it was only broken through twice. Once here and then once here. That's it. Zones that are very, very clear. Areas where price has very, very clearly and specifically bounced there over and over and over. So that's the first thing. Areas where price clearly has bounced in the past over and over. Hasn't really swiped through it very often. Second thing, I thicken up my zones nice and thick. And I mean thick with 2 C's. Y'all boys know what I mean. So let's say you have an area like this here whenever price was bouncing here. It started up here, but then price bounced like right here. So it could be that. But then it also kind of came down there to that previous high. So it could actually be this right here. And you have this little cluster of levels that you're like not sure price is going to bounce. Same sort of thing down here. You've got like that low, but then you've got price stopping a little bit like closer up top. So it becomes a question like what are you going to do? Like, what are you going to do right there? So here's what I do. I don't even play that game. I just delete everything. And I just draw a nice thick support resistance zone to represent that general area is where price has been bouncing. And that's it. I just thicken it up. If sometimes price won't go all the way into a zone, sometimes it'll go really far into a zone, break past it a little bit. I don't like getting myself trapped in zones where you're trying to be super, super specific and clearly define them down to almost the exact pip. In practice for me over the past 5 years, that just doesn't work. And I'm just speaking from experience. I can only say what works for me. That just doesn't seem to work very well for me. It just seems to work better when the zones are thick. So let's actually go. Let me prove this concept here. I'll show you 3 trades I'm in right now using support and resistance on the daily chart. I bought right here on Euro Canadian dollar. You know why I bought? Because price is just at a support zone. That's it. Support twice here, support the resistance twice, broke above. Found support once and then twice, and now we're back here for a third time. I just think it's going to bounce again. So if price breaks below this zone, I'll lose like $3,500, and if it bounces here, I'll make like $7,000. If this is Euro GBP right here, daily support zone, if price breaks below this zone and tests it, I actually already took a sell here, and I closed that in profit. Now I got back in today, risking $3,000 to go for about $3,000 if it wins. Just a break and retest of a support resistance zone. GBP JPY, this could like plain as day, like could not be simpler. It's at a resistance zone. There's the previous high. It's bounced nicely there. It bounced again here. We're just at this zone for the 3rd time. I don't know. I just think it's going to bounce. And if I'm wrong, I'll lose some money. And if I'm right, I'll make some money. So on this one, if I'm wrong, I'll lose like $3,000. And if I'm right, I'll make like 4,500, like a little over 4,000. And if I'm wrong, normally what I'll do to lose a little bit less on my losers is I use 2 risk structures. One of them is using stop losses to make it simple. Another risk structure I use is hedging, where if price breaks above the zone, I'll either hedge or I'll get stopped out, and then I'll manage the trade from there. So in this case, if this breaks above the zone, I'll probably just close right there. That'll be maybe like $1,000 loss instead of a $3,000 loss. So it's like I lose a little bit less when I'm wrong versus whenever I'm win, I make a little bit more. Let me show you all this stuff actually on chart. Let's pick like a random currency pair here. We'll pick a number between 1 and 10, 3. So that gives us EuroCAD, EuroGBP, and GJ. So let's go to a different GJ chart here. and I will clear all the drawings. All the drawings are removed. We'll scroll back somewhere random, and then I'll hit replay. So here we are on, this is the daily chart. Let me go to the 1 hour so it's easier. Let's just exit all this. So 1 hour chart, keep it simpler. Scroll back somewhere random, then I'll hit replay, and here we are. Cool. So let me give you an example. We're here on this chart. We're not going to be drawing zones that are wishy-washy, pishy-poshy, where it kind of snaps around back and forth. We don't want any of that. We want the clean, take them home to mom and dad zones, where it's like nice and clean and everything's very, respectful zones that have just bounced very nicely. Stuff that's not going to be like unreliable. And just thicken them up. Keep them nice and thick. Don't draw them too skinny or too tight or anything. So that's what I do. Now, if price gets here, we can sell. And then if it gets back down here into this support zone, we can buy. If we're wrong, we'll just use a stop loss here just for the sake of simplicity. Like I said, I use stop losses. I also use hedging to control risk as well, depending on the context of the trade and how close the next zones are. Just all depends on the situation. We'll do it in stop losses here just to show proof of concept, make it real nice and simple for you. Now remember, support and resistance has no predictive power. It is just a good way of controlling risk. That is it. You cannot predict where the market's going to go. I don't know where it's going to go. You don't know where it's going to go. Nobody knows. So if we can enter right here, I normally enter about halfway in between the zones. I don't bother waiting for rejection. It seems to be a waste of time to me because price is still just going to go up or down whether you wait for rejection or not. So I just enter as soon as it gets to the zones. That's typically what I do. My targets are generally at the next zones, and then I put a stop just below the zone on the other side of it. Not too close because it'll pin past it sometimes, but not too far either. If I do put it far, I'll just risk more, and then I'll have an alert just on the other side of the zone to close if it breaks through the zone. So in this case, here's what the risk structure will be. So it'll either stop out or it'll hit the target. So in this case, it hits the target. Goes and hits the target. That's great. So price also got to this next resistance zone. So I would have taken a trade there. So I would have sold right here at resistance. I would have had a stop loss right past the zone, right there, and then a target down here at this next zone. So in this case, this one lost, so that's -1 unit of risk. Let's say we're risking $1,000 per trade here. And, we made whatever this was, a little over 2,000, then lost 1,000 on that one. So what do? We do the same thing. We just draw the support zones. We wait for price to retest, and the price retests the zones. Then we get an entry about midway into the zone. So in this case, price, it barely broke past the zone. It's not really a clear break or retest, so I'm just going to pass this one up. Would have worked out. Cool. So we'll wait for price to get all the way up here to this next resistance, then we'll sell. So we enter at the zone, we sell, we put a stop loss just above the zone, target down here around the next zone. We'll do it like about midway through, see if it comes and tests. Then we'll just let it play out. So it comes and plays out. So we win this, we make 2.5, whatever it is we risked. We'll do one more trade, then we'll wrap it up. I'll show you guys, the basics. So price breaks, it retests this zone. So now we've broken and retested. I think this is going to break back above the zone, but just to show you how you can mechanically do it, a sell right there, a stop loss just above, a target down here at the next zone, and then it either wins or loses. It goes up or down. In this case, it went down. So it's like whenever it comes to support or resistance, keep in mind you will win half the time and you'll lose half the time. Most people's win rate sits somewhere around 50-50. On some weeks, my win rate is like 70, 80, 90%. On other weeks, my win rate's like 20% or 30%. It averages about to be 50-50. That's pretty much like most people who are average traders like me, because I'm nothing special at all. Been doing this for 7 years and I'm still nothing special. Most people average out to be 50-50. It'll bounce at the zone about half the time, and it'll break the zone half the time. You'll be wrong half the time, you'll be right half the time. And the thing is what makes it profitable trading with support resistance is that it's a great way to control risk. You can enter at a specific area, and then you can have a way to say if it breaks the zone, I'll be out of the trade and I'll lose some money. And then if it bounces at the zone, then it'll be nice and I'll make a little bit more than I lose. The only reason I'm profitable is because I make a little bit more money than I lose. I have winning outcomes most of the time whenever I'm using hedging as a risk structure. You can watch my other videos if you learn how to do that. It's an even higher win rate if you look at an outcome by outcome basis than using stop losses. But this is the simplicity behind it. Drawing simple support resistance zones, accepting that you have no clue what's going to happen, and just entering at support, buying at support, and then selling at resistance, getting out if you're wrong for a small loss, and then if you're right, holding the trade to the next zone where you think it's likely to bounce to make a little bit more when you're right than the amount of money that you lose when you're wrong. So that basic. If you want to see me do this live every single day, click the first link in the description. That's my free Telegram channel. I send out all my daily analysis, trades, support resistance zones, make unlisted YouTube videos specifically for people in there. There's like 30 or 40,000 people following me in there right now. I don't know. It might help you too. First link in the description. Thanks for watching. I'll see ya.